What is going on, YouTube, and welcome back to the ClearCryptos educational channel. My name is T. Hobbs from the Crypto Shop, and of course, I got my man Jay Seals with me. What's going on, brother?
What's up? What's up?
All right, and today on the channel, we're going to be discussing a trading plan. Now, guys, if you've never heard these words before, I'm praying for you. However, today on the channel, we're going to be discussing it so you can have an idea of what a trading plan is. If you guys have ever been in crypto or in stocks and you've never had any experience on anything, sometimes you probably heard the word FOMO, fear of missing out, right? That is the absolute worst word to think about when it's time to enter and exit a trade. You never want to enter on FOMO and you never want to exit on FOMO. Instead, you want to take the opportunity to educate yourself on what a trading plan is, what it means to you. And today we're going to try to break that down in the simplest form for you. Like I said, this is the ClearCryptos educational channel. So be sure to like and subscribe. Turn the notification bells on so you can be notified every time we go live or release another video. That being said, let's get into it. Now, guys, listen. I pulled this up from Google. This is just a random picture on exactly helps to kind of guide us through a trading plan. So the first thing we're going to talk about is outlining your motivation, right? It's just going to help us get through this video. Now, outlining your motivation, what does that mean to you? What that means to me is basically I need to understand why I'm in this trade, meaning I have already done my research. I've looked into this particular token and or coin or stock, whatever it is you're getting into. I've done the research. I trust the team. I know that this is the trade that I'm going into. The second thing, decide how much time you want to spend in the trade. This I like to speak to when I say, hey, do I want to be an investor? Do I want to be a trader? What exactly I'm trying to do with this trade? And Justin, you want to kind of elaborate on that? I know I get to talking and, just take up all the time.
Yeah. So when you want to decide so first off, you need to decide how long you want to be in the trade. So whether you're going to be, in it for the day, if you're going to be in it for a couple days, which is swing trading, or it's a long-term investment plan for you, you need to decide how long you're going to be in the trade and then how much you're willing to commit to the trade, right? So do you want to put, 1 ETH in? Do you want to put 3 ETH in? What is your risk tolerance? That's what it comes down to for how much, because how much you're willing to put in the trade, you also have to be willing to lose that much as well, right? So if you're not willing to lose 1 ETH, then you probably shouldn't put 1 ETH into the trade, right? Because if it does go sideways on you, if it does rug pull, then you're out 1 ETH. So you needed to define your risk from the start. That way you're okay with potentially losing that money so that you don't put your emotions into the trade.
Exactly. And then that kind of goes into the third point on this chart, which is defining your goals, right? Define exactly what it is you're trying to do with this trade or this investment. Are you just dollar cost averaging like a long-term investment such as ETH or Bitcoin? Are you trying to 2x, 3x, 4x your money? Are you willing to lose 20, 30, 40, 50%? Exactly understanding, like Justin said, your risk management, your risk tolerance, and then understanding where you want to go if the trade is profitable. It's important to look into where you want to go if it's profitable, but it's also even more important to understand where you want to get out if it's not profitable. All right. So that's when they go into choose. I think we kind of covered both of those. Choose a risk reward ratio and then decide how much capital. Justin kind of hit on it, right? Whether you want to put 1 ETH, 2 ETH, 3 ETH, 10 ETH, 20 ETH, whatever it is, that needs to be an overall percentage of your overall capital, meaning you should never go all in on a particular project or company that you want to invest in. Instead, you should decide if it's 10%, 20%, 30%, and so on, a part of your portfolio so that when you either win or lose on this trade, you're adding value to your portfolio. Or if you lose on this trade, you're only losing a certain percentage of that trade, therefore losing an even smaller percentage of your overall portfolio.
Yeah, and I want to go back to choose a risk reward ratio real fast, because that's actually a really big hack that you can add to your toolbox when it comes to trading. So for your risk to reward ratio, right, that's a ratio of how much you're willing to risk to how much you're willing to get in profit, right? So you always want to have a higher reward than your actual risk, right? So how we define that is normally a risk reward ratio would be I'm risking, I'm just going to use figurative speech. I'm risking 1 ETH to make 3 ETH, right? So my risk is lower than my reward. So you can play with that. And the way that you can kind of manipulate that is if you're risking 1 ETH to make 3 ETH, then you could lose on 2 trades and win on 1 trade and still make up for that ETH loss, right? So you can actually be in profit by only winning 2 trades and losing on 1, and you still come out a winner. So you can really hack your way to success, is what I call it, when you're able to manage your risk correctly and also take profits to manage your reward correctly. And then the next thing is assess your market knowledge. So with that, you want to make sure that you know whether we're in a bull market and a bear market. You want to be able to adjust to whatever market conditions we're in because they constantly change. And by those changing, you need to change up your strategy, whether you're going to dollar cost average into the play, or you're going to play a breakout of a pattern, or you're going to play a break of resistance that now turns into support. There's so many different strategies that you can potentially decide to implement into your own system, but you need to be able to access the way the market is moving, right? And you can also throw other things into there, like if you're in crypto using the stock market, because as we preach all the time, the stock market is what moves crypto right now. So knowing knowing the stock market, and then also knowing the news and knowing what's going on in the world, all these things play into your market knowledge and being able to make sound decisions that will go into your trading plan.
Absolutely. And just for a quick example of a trading plan, this is my personal YouTube channel, the Crypto Shop. And this is an example of some things that I threw out in the members chat. What I wrote in here was 2 months ago, but it's still relevant to this conversation. It says, Crow approaching the 20 cent level of resistance. I would like to see consolidation at this resistance line, and as it has been strong support. If I see strong accumulation at this level or a break to the upside, I will add more Crow at this level of entry. Long-term hold, but a good swing for potential exit at 33. That is a perfect definition of a trading plan. One, I knew that I am a long-term holder of Crow coin, right? Therefore, I was looking to add more to my position. However, for those of you that are thinking about swinging it or looking for an entry and an exit, I also define a swing trade option for those of you that are looking for that. To me, that is me looking at the technical analysis side. There's multiple ways you can look at this. You can look at it from the fundamental analysis, but this is me looking at the technical analysis and saying, okay, at these particular levels, these are places that I'm looking to add and load into my bag and then just leave it alone. I'm not looking to swing it, but it's definitely reasonable for you to look to swing it at those levels. So
yeah, and then I have one too. So in our Discord, I posted this chart of Ethereum. So Ethereum was going on a run, and then we pulled back into demand. I use supply and demand, and this is my demand zone. So my trading plan would be to add down here in my demand zone. We had a perfect bounce, and my exit strategy was right here at the top of my supply zone at 1662. And so we almost touched that to a T. So I would have got out around here because we don't have to be exactly perfect. But my trading plan involved my entry. My stop loss would have been right down here at 1,441 because this was prior resistance, now turned support. And then my exit was up here at my supply zone. So I had a full plan, no emotions. I knew exactly where I wanted to get in, exactly where I was going to get out for a loss, but exactly where I was going to get out for a gain as well. So that completely removes any emotions that I have. The only thing that I have to fight now is just follow through my plan so that nothing scares me out of my plan. If you follow your plan, whether you win or lose, it's still a winning trade because you followed your plan. And as long as you can repeat that over and over again, eventually you will become profitable over the long run.
Absolutely, absolutely. And then last but not least, this is probably the most important thing. Start a trading diary, meaning write down your trades as you execute them. whether you win, lose, or are indifferent, right? There's certain trades you can get in and out of that you don't lose or win any money, right? Start thinking about setting up a trading plan and literally, or a trading diary, writing down the reasons why you got in the trade, the reasons or what happened when you got into the trade. Why did the trade go good? Why did the trade go bad? What was your profit? What was your return? And what was your risk ratio? So those are definitely things you definitely want to pick up a book and start writing down in your journal. So
yeah, trading journals are super important. It allows you to be repeatable, right? The whole part of success when you're, regardless of whether you're a long-term investor or you're a swing trader in the crypto market, it doesn't matter. Being able to repeat this process over and over and over again is where you're going to find success. But to do that, you have to, well, you don't have to, but we highly suggest starting a trading journal. Like Hobbs said, you just track everything, your entries, your exits, how you were feeling, what made you exit, what made you enter, why you like the project, what utilities you like. That way you can go over it and you can continue to have success doing the same things over and over and over again, because that's how you build a successful trading plan using your diary.
Yeah, thank you guys so much for tuning in on this episode of ClearCryptos Education. Guys, pay attention. Like I said, like, subscribe, pay attention to what ClearCryptos has got to offer, because you've got a group of ambassadors, influencers that have come together to provide voluntary information in regards to clear education on how to do things right in crypto. Thank you for stopping by the ClearCryptos channel. My name is T. Hobbs. That man up there is Justin Seals, and we'll catch you guys on the next one. Peace.